on Tesla's first quarter and what's to come. We want to bring in Mark Fields. He is the former CEO of Ford. He serves on the boards of Hertz and Qualcomm, and he's a CNBC contributor. And Mark, just looking through this, I mean, it's a little reminiscent of what Amazon would do from time to time, which is making sure that they are going for growth over profitability. Yeah. I mean, listen, you saw from us comments yesterday that they're going to sacrifice profits for growth. And I think the way they're looking at it is listen with the market growing for EVs pretty steadily right now, combined with the federal incentives, it's a bit of a land grab. And he wants to, expand his number of vehicles on the market before a number of competitors come in, because there's advantages to having a larger what they call car park, whether it's more parts and service business where you can sell more software features down the road, or ultimately if they ever get to autonomy. So he's using pricing as a cudgel against the competition, and he's doing it because he has positive margins on EVs versus the competition, which may not. Did you know that Tesla's CEO Elon Musk has recently disclosed Tesla's biggest opportunity to gain massive market share? The Tesla executive made this known recently, revealing that this could be Tesla's tool to stay ahead of the other auto manufacturers and lead the industry for many years. While Tesla already leads the EV market by a fair margin, the automaker still needs to secure this position, and just maybe this is the opportunity to do so. Hey guys, welcome back to Tesla. Tomorrow, Tesla is looking to increase its control over the production of its vehicles by developing its own battery cells. This effort is part of the company's mission to reduce the cost of EVs and make them more affordable. Tesla's energy business is a huge gold mine yet to be tapped. This venture has been thriving over the years and is growing faster. Tesla disclosed in a previous quarterly letter to shareholders that it deployed 1,100 megawatt-hours of energy storage, up 62% year over year, which is by far the highest level of energy storage deployments that it has ever achieved. To better address the fast-growing market for its energy storage business, Tesla said it was ramping up production at its factory in Lathrop, California. Tesla has also recently announced that it is building up its factory in Shanghai to produce its Megapack battery, further expanding into the country at a time of fraud. The new factory where Tesla will manufacture its high-capacity battery for energy storage is scheduled to break ground in the third quarter of this year and then start production in the second quarter of 2024. The automaker plans to produce 10,000 Megapack units every year, which is equal to about 40 gigawatt-hours of energy storage, and this product will be sold worldwide. But this is just an introduction to Tesla's plans. Now, let's see how big this could actually be for the car company. But before we start, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. Tesla's current battery sales are made by Panasonic, LG Chem, and CATL, which are all large suppliers in the auto industry. While these companies are reliable suppliers, they are not able to meet all of Tesla's needs. The company's design requirements are highly specific, and the pace of innovation is quite rapid. Tesla wants to create a battery cell that is more efficient, durable, and cost-effective than what is currently available on the market. This is going to allow the company to reduce the cost of its vehicles and make them more accessible to average consumers. Several analysts have also stood by their opinions on the unexpected benefits of Tesla's solar and energy businesses, which have come to light, with many claiming that this is a potential driver for the company's growth in 2021. Tesla reported $801 million in revenue from its energy generation and storage business, even though this fraction of the company is a relatively small portion, generating about 5% of the company's revenue a year later. While Tesla has not been fully focused on its solar business, there are still opportunities that are there to fully optimize the business in the future. The capacity to store electricity when it isn't in demand is crucial as electric utilities move towards wind and solar energy to replace power generated by fossil fuels. According to Tesla, a Megapack unit can store enough energy to power an average of 3,600 homes for 1 hour. Tesla's Megapack batteries can also be used for utility-scale power storage, such as saving wind and solar energy for later use. Tesla is also looking to reduce its reliance on other companies for its battery cells by manufacturing them in-house. This will allow the company to lower its costs and then increase its profits. It will also give them to hold 10 to 20% of the electricity they generate. The combination of China's shift in pricing and the regulations for new renewable energy installations to store the Megapacks is going to be close to the factories that manufacture most of the world's lithium iron phosphate compounds for batteries. These compounds are less expensive to make than the materials previously used in rechargeable batteries, which makes Tesla's battery cost-effective. China is the second largest market for Tesla after the US, accounting for nearly a quarter of its revenue in 2022. Its car plant in Shanghai, located on the outskirts of the city, accounts for roughly half of the company's global car deliveries for Tesla. Shanghai is the site of its second-largest factory for making electric cars. The plant not only supplies China's domestic vehicle markets, but also exports a large number of cars to Europe, and in turn, Tesla has found it harder to build factories as quickly as in Shanghai with the new plants. Tesla will take advantage of China's dominant battery supply chain to increase the output of its megapacks and then lower their costs in the hopes of meeting energy demand and also its energy storage as the world shifts to using more renewable energy sources in China. Tesla faces competition from homegrown players with similar and cheaper electric vehicle names. Like NIO and XPeng, Tesla cut prices in October for vehicles sold in China, fell as material costs fell, and offered various incentives to buyers. Prices slashed again in January after deliveries of its Shanghai-made cars plunged in December. Tesla already has a mega pack plant in Lazarop and is in the process of increasing production there. Musk stated in a tweet that the planned Shanghai factory would supplement the output of the Megapack plant in California. The Biden administration as well as the Chinese government have been pressuring companies to make large investments in emerging technologies. The $370 billion Inflation Reduction Act, which President Biden signed into law last year, provides incentives for rechargeable battery production in the United States to supply the American market. Tesla bulls and analysts have also stated how this would take the car company to a whole new level. Tesla investor Gary Black had previously said that he expects to see Tesla Energy earn about $20 billion in revenue in 2023 and about $8 billion in gross profit. According to him, this is a catalyst that is not well known, and because Tesla Energy has not contributed much in the past, there is also little that is expected from the business. Likewise, stock analyst George Jan Erikas said in a recent note that Tesla is a sustainability behemoth, pointing to Tesla's solar energy and energy storage program, electric vehicles, and its dominant positions in both. He also expects to see continued growth from the company, and according to him, the coming months seem pretty positive for Tesla, and the car company has an incredibly strong balance sheet to weather a recession. Also speaking on energy demand, ARK Investment CEO Cathie Wood stated that while the demand for crude oil may have peaked in 2019, EVs are taking share of total auto sales. She further cited that ride-hailing services like Uber are partnering with car rental companies like Hertz to rent EVs since EV maintenance costs are 50 to 60% lower than those for gas-powered cars. The news of Tesla's battery factory in Shanghai comes as geopolitical tensions grow between Washington and Beijing, and as economic uncertainties linger in China. These factories are causing many U.S. businesses to be wary of making new investments in the country. Last year, Tesla suspended production of its Shanghai factory on several occasions. First, early on in the pandemic, there was a lockdown of the city, and then in December, it faced a wave of COVID-19 infections among workers and suppliers. Overall, Tesla's decision to make its own battery sales is a smart move, and it will help the company reduce costs, increase profits, and then have more control over its production process. This could be a huge step forward in helping Tesla reach its goal of making electric vehicles more affordable and accessible. Do you think so? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen.